Welcome once again. A great evening, a great day to everyone. Thank you for tuning in again on this financial literacy and money matters training that we do have here every Thursday, same time. It is always a pleasure to learn, to tackle different topics here. As a community, as a family, we come just to share the knowledge and see how we can better ourselves. So our topic today, it is, as you saw it, is choosing the right insurance policy. Key questions every client should ask before taking in one. Most of the time we tend to cover, life insurance and maybe, long-term planning. But tonight I thought like our insurances are broad. We need to understand all of them because all of them actually do affect us financially. So we are going to dig deeper into all, at least not all of them. I chose tonight to look into the car insurance, the home insurance, the health insurance, the life insurance. What do you need to know before you pick that policy? Because most of the time, as a professional who does this, who have been doing this for quite some time, what people come looking is most of the time different from what they should be looking for. Most of the time, people will tell me, get me the cheapest you can get out there. But remember, they always say cheap things are always expensive. So we are going to dig deeper tonight and see exactly what we should be focusing on instead of focusing just on the price or the premium, what we should be focusing on for us to be able to cover our families, ourselves the right way. Again, the topic is there, choosing the right insurance policy. Key questions we should all understand, or we should all try to know before we pick what we pick. So my name is Immaculate Businje. I am a financial freedom, I'm a financial professional. I'm the founder and CEO of IB Financial Freedom Solutions, which is where my heart is always is. I'm an educator, I'm a coach in financial solutions. So there is my contact just in case you need to do that. So we'll tackle this topic to see what are our objectives tonight. What are we trying to learn tonight to be able to pick or choose our insurance products the right way. So one, we're going to look into understanding the purpose of each insurance product. Remember, we're tackling different ones right now. Most of the ones that we use, the personal lines that we normally use. So we're going to learn the key questions to ask before you buy your coverage. Get those questions, get to understand exactly what your coverage entails. We're going to compare affordability with the adequate protection, not just the cheapest, because you might get the cheaper product, but that cheaper product might not be adequate for you or might not be enough to protect you or your family or your assets. So then you're going to recognize the common coverage gaps and exclusions. Because most of the time, you call a company to give you a quote. If the first thing you're telling them is the price, it is your worry, they're going to exclude a lot of things and you may not even know, and you end up with a shady policy. You're thinking you're paying something premiums every month, but at the end of the day, you find yourself not really covered. So then we're going to make those informed financial decisions as we conclude our training tonight, to be able to know that whatever we do, we are very aware and educated. So why insurance matters? When people talk about insurance, what comes to mind is, oh, life insurance, oh, this. But why does it matter? So here they're telling us insurance protects what matters most when life takes an unexpected turn. Could you be driving your car and you get into a car crash? Could you get sick and your life goes underwater? Could your home catch fire or maybe hit by a storm? What is it? So we're going to look into that. So what is the definition? What is life insurance, by the way? So sometimes what is insurance? Insurance in general, what is it? So most of the time, it is a contract between you and an insurance company that provides financial protection against an unexpected loss. Again, we're talking about different kinds of losses depending on what you're losing. In exchange of regular payments called the premiums, that amount of money you pay monthly towards your car insurance or your health insurance or your home insurance or your life insurance, those are the premiums. Ichiguzi, what you give out for you to be able to get covered. So what is the purpose of the life insurance? So we want to know what is it, that contract, because you're giving money, they're giving you a guarantee that if your car crashes, we are going to cover you. You're not going to lose your asset. You're not going to, when you get sick, you're not going to be paying for yourself, but you're going to share. So the purpose of insurance is to transfer that financial risk from an individual, from you and me, to an insurance company. So if my car crashes, I'm not going to take all the responsibility of that crash or buying a totally different or new car. The insurance company is going to take the risk. I'm transferring the risk to the insurance company with the payment I pay every month for me to be able to be covered if that unexpected turn happens to me, my family, or my assets. So most of the time, we have to remember that insurance is not about what could happen to you. It should be about what happens to the people who depends on you. Let's say, for example, if you happen to get sick or God forbid you pass and you're protected with a life insurance or with a health insurance or with a home insurance, that beautiful home you saved so much to get, what would happen if it was gone and you're not recovered? So with all the insurance, we said we're going to cover different kinds of insurances that we do tackle. And the auto insurance in this country, people who are in the US, it could be anywhere else. At least every family that has a car, they automatically have health insurance. It's not automatic because it is required. Some states you might actually drive without it, but like maybe most of the states you're required to have an auto insurance. So, but all of us, what we're talking about today, do we understand? Do we know the questions we ask? When you call me as an agent who sells an auto insurance, do you know exactly what you want so that I can give you the correct coverage? Or I can give you all the riders you need. There are no exclusions. Do you know? That is what we want to learn tonight. So what is the purpose? Of course, we know the purpose. The purpose of auto insurance protects you financially if you cause an accident. Your vehicle is damaged or your car is stolen. It also helps cover medical costs and provides peace of mind on the road. You don't have to hit anyone. Someone can hit you. So these are the key coverages or the key questions you should have when you're calling Immaculate to give you a quote. Or even before you think about the money, how much you're going to pay every month, you have to understand these key coverages. The liability, the deductibles, the collision and the comprehensive insurance, uninsured and underinsured motorists, the discounts you could get, all these are the things, these are mostly technical words. Many people don't even know what the uninsured, the underinsured is, or the collision and the comprehensive. Sometimes we just need a car insurance. We need a car insurance, but for you to be actually covered the correct way, you need to know exactly what you have. So let us actually dig deeper. The reason I started with auto insurance, I've been actually learning some quotes of recent, and people tell me, oh, I need the best. I need the cheapest. Not the best. Remember, it's not the best. I need something that I'll pay not more than this much. But you have to remember, how much you pay should at least be giving you what you need. So let us look at the liability limits. For example, what are liability limits? For example, the liability protects you if you cause injury or property damage to others. So, and they tell you here, higher limits help protect your assets and the future. They say, for example, I'm driving my car there, I go hit someone, I crash into someone. The liability part of the insurance, car insurance, is going to protect those people that I cause harm. Maybe I happen to run into someone's car, Mr. John, and the car is completely a total, or Mr. John is also hurt in the process of the collision, or maybe I run into someone's home. So the liability is going to the liability part of the coverage is going to help you cover those bills you should have taken on yourself. Remember, the insurance, the part of it is you transferring the risk from yourself to an insurance company. So if you have a car plan that has, of course, most states, at least you're required to have that liability part. And some people will be like, oh, I just need a liability. And I'll be like, so you're worried about other people, but you're not worried about yourself? What if you are injured? What if your car is completely messed up? Are you ready to buy a new car by yourself? Or you want something that is going to cover the other person and cover you as well? So then we talk about the deductibles. Deductibles come into different kind of maybe they're on auto, they're on a home, they're on health, or these deductibles. That is the amount you pay out of pocket before insurance covers the rest. So when it comes to auto, the more money you pay into the deductible, it is going to end up reducing your premiums like in any other, even like we'll see also in a health insurance, because if you want to pay little when something happens, your premiums are going to end up going up. So now let us look, what are the collisions and comprehensive part of the coverage? Most of the time, for you to be fully covered, you need actually three of these. You need the liability part, the collision, and all these you need them, because the collision and the comprehensive covers the damages to your car now from accidents or collisions or events like theft, vandalism, fire, storm. Because like people who live in Texas, for example, you hit with a storm and your car possibly is parked outside. If it's messed up or hail, and then that collision and the comprehensive one is going to help you cover that. Or even if you collide with someone else and you have collision part, it is going to help also cover you, because we want to make sure that that transfer of risk is not helping other people, but it's also helping us. The other part that I found is people don't tend to understand, because the people I've been doing quotes for, they tell me, oh, I'll be like, they'll send me possibly what they have. I'll be like, but you're not insured for the uninsured or underinsured motorist. What does this mean? So the uninsured or underinsured motorist, part of the coverage for your auto, that means you protects you if you're hit by a driver with little or no insurance. So remember, there are so many, although the insurance is actually required, like auto insurance is required, you'll be surprised how many people on the road that are not insured. Leave alone being underinsured, they're not completely insured. They drive a car. Some of people drive a car without even a license, leave alone the insurance. So if you happen to be hit by someone who is uninsured or underinsured and you only took liability, or maybe you took the collision and comprehensive, but you did not add the uninsured and underinsured, and you're unlucky to be hit by someone who doesn't have any, your insurance company is not going to cover you. Your auto insurance is not going to cover you if you're hit by these people. That is why when you're looking for that coverage for your auto, you have to make sure that everything is covered. And don't rush in telling the insurance agent that I need something cheaper. If you say that, and those people are possibly not ethical enough to tell you, they'll find some stuff to actually exclude. And most of those will be the uninsured, the underinsured, or even like rental. Do you have a rental coverage? If your car is in a shop How are you going to go to work? Did you add the rental benefit on the rider on? Did you add the towing? All those are the little things that sometimes we minimize, but they tend to be very expensive at the end. And then there are so many discounts out there. You know, you can save by using the safe driving or bundling. Do you have a car and a home? Do you want to bring them together? Do you have multiple cars at home? Instead of your son or your daughter having a different car insurance, you have another one and your wife has another one. Bundle everything. Bundle your cars, bundle your home, bundle other assets you're trying to insure so that you can get some good discounts there. These are things sometimes that are known by those professionals who do that. But the more questions you ask, the more aware we are going to be able to get actually some good policies out there. Instead of paying, you end up paying every month. And then when you get into a car crash, you find yourself actually carrying the whole risk instead of transferring that risk to the insurance company that you did. So they're giving us some real life scenarios here. So for the collision, for example, you cause an accident and injure someone. Liability coverage will help you cover that for their medical bills and other damages you made. And then if a storm causes a tree to fall on your car, comprehensive coverage will help because you have everything. So if you're hit by a driver with no insurance, your protection covers medical bills, lost wages as well. So we have to make sure that we're not just getting insurance, we are completely covered. It is always good because recently, so I had someone with a brand new car, but when I looked at their coverage, they didn't have all those uninsured and uninsured. So I was like, this is a brand new car. If something was to happen, if you're to be hit by an uninsured motorist, your car, you might lose it because those coverages were not there. So again, the right coverage protects your car, but the right choices protect your life. So make sure you're fully covered. That is the purpose of having those insurances, to transfer all the risks to other people or to the insurance company. Now we're going to your home, your beautiful home. We worked so hard for the American dream. You got your beautiful car. When you get your coverage again, you have to understand what is the purpose of that. The purpose of a home insurance is to protect your home, your belongings from unexpected event, and help cover costs so you can rebuild or recover with confidence. What does that mean? You have this beautiful home. Possibly, most of the time, you're going to have a coverage anyways, because if most of the time, if the home is not paid off, you have to find a coverage anyway, at least that covers the dwelling. What they call the dwelling is that whole thing, the home. But remember, it's not just the body of the home that you have. You have your stuff in there. Everything that you put in the home has also to be covered. So before you pick the coverage, even let's say your home is paid off, yeah, you paid all your money, confirm building cost coverage. If this home was to actually be caught on fire, or a storm completely put it down, what will it take you to rebuild that home to its value? What do you need? So never take a coverage that is below your rebuilding a cost. Because if you do that, and you took the home is 500,000, you took the coverage for 200,000, guess what? That is the risk you actually transferring to the insurance company. That is exactly what you're going to get. And remember, don't just cover the dwelling, don't just cover the physical home. Remember to also cover your personal belongings. Everyone who has a home, you know how much you put into that home. It is a lot. You have the furnitures, you have your belongings, your clothing, all those good stuff you have in there. Make sure the coverage helps to replace or repair your personal items if they are actually affected. Make sure you have all that. And remember to review liability coverages as well. Always make sure, because it's not just the home. If someone, for example, you had a guest who came into your home and they fell, you know, you can be liable for that if you really know, because you might be like, hey, I didn't tell them to come, but they came to your premises if something helps. So those liability coverages as well, they help protect you if someone is injured on your property or causes property damage to your home. Sometimes we love to have visitors and guests over, but if you're unlucky and someone is injured at your premises, if you don't have those liabilities on it, you may end up carrying the cost as well. And then always understand the exclusions. What is not covered in my area? Some home coverages might not pay for flood, for example, if we live in a flood-prone areas. Understand that. So, or maybe you live in a place where they always have fire. Like people in California, they tend to have those issues. So standard policies may not cover flood or earthquake damages. Know what is excluded. Some of these exclusions, though, you can actually add them on yourself as a rider. You can add them on, but you have to understand that maybe in my area flood is not covered. What if there is flood? Maybe earthquake is not covered. If that is a earthquake prone area, please make sure that you have something you can add on, because we can always have add-ons on our policies, but you may not know if you're not aware of actually even what you have, because some people, it is not being ignorant, is not knowing, because all of us don't know everything. If I go to see a doctor, I'll take whatever they tell me because I don't know exactly what they're doing. So I'm not going to expect everyone who has a home insurance or a car insurance to understand everything that is entailed in their policies. That is why we come here, again, to refresh our minds, to learn together, to make sure that we understand everything that we do. So like I was saying, always consider some endorsements. That's what I was saying, that if you possibly have a policy that does not cover flood or earthquake, you might be able to add those add-ons like water backup or whatever, or anything you can put on that can be added on as an endorsement. You could be able to do that to save your home. But the key here, don't let the premiums or the money that you pay be the judging stick for you. Because you might want something cheap and you forget that what you own, your asset, is very actually expensive. So consider what you have before you decide, I want something cheap, because you don't own a cheap home. So again, the right coverage today brings peace of mind and protection that lasts. So your home, your belongings, your liability, your peace of mind. Make sure that, because we work so hard to get those beautiful homes, make sure it's correctly insured. Now we come to our life now, our health insurance. I've been doing health insurance for quite some time, but the question that keeps coming, I need something very cheap. I don't want to pay more than $50. But guess what? If you to ever, God forbid, be hit with like a critical or chronic illness in this country, it can leave you in bankruptcy. So you don't want to do that. Always try to transfer that risk. You may be young, you may be healthy today, but you don't know what comes tomorrow, because younger people get sick too. Healthy people wake up and they get into a car crash again. So what is going to help you? So again, here we're looking into those questions we're talking about. The questions should always ask. These questions, key questions, should always come before anything you do. You're taking a health insurance, check with your providers. For example, I tell my clients, those with maybe chronic illnesses, you have a specialist you've been seeing, you have a doctor you don't want to change. If the a new enrollment comes in and you're about to pick up a different policy, please remember to check with your doctor. Make sure that doctors and hospitals are in your network, because I always tell people, if you get a health insurance and you're trying to go out of network, the insurance company is not going to pay. So make sure that the coverage you have is actually being taken by the doctor you need. And most of the time I tell people, these doctors or the hospitals will never take you if you don't have a coverage. So never bind yourself to one particular insurance company just because you feel like, oh, Dr. John is the one, takes only United Healthcare. That's an example. If you don't have that coverage, that doctor is not going to see you. So don't actually keep yourself in one place, or maybe you're paying double the price just because that doctor doesn't take that insurance. Remember, if you don't have it, they're not going to see you. So talk to your advisor, your agent to help you as well. So understand the cost. If you're taking the health insurance, understanding that, know your premiums, know your deductibles, your co-pays, your out-of-pocket. I love when I explain to my people. So when you have a health insurance, it does not mean that everything is paid 100%. Most of the time, actually all the time. So we don't have yet an insurance company that pays a policy that pays 100%. Maybe you may have 10%, which is maybe you pay now the coverage is supposed to be $500 a month. Maybe you're paying $100. Maybe you're paying $50. Maybe you have a deductible of $100. Or if you're lucky, you have a zero deductible. I always tell my clients, if you can, try as much as you can, mostly in health insurance, to minimize the deductible as much as you can. Mostly if you know that you see doctors more often, you see specialists more often. If you do that, the higher the deductible, the more money you're going to pay out of pocket. Why? Because before the health insurance companies start paying for you, you have to exhaust your deductibles, right? So you have to understand, don't tell me I need something, I don't pay anything monthly. The little you pay every month, the higher the deductibles are going to be for you, or the co-pays when you go to see the doctor. So the deductibles, it is your responsibility what you pay before the insurance company, payment starts to kick in. The co-pays, sometimes you go to see your primary care provider, your copay is like $5, $10, $20, $100, depending on how much. And then this out of pocket, that is the responsibility. You can never go above an entire year. Maybe you have $2,000. If your $2,000 is your out of pocket, then that means that in that entire year, you're going to pay more money. So try to minimize your deductibles and out-of-pocket maximum so that if something unknown was to happen, those things we don't plan for, at least you're fully covered. Then you also check your prescription coverages. I tell my people, if you know you have a chronic illness and you take medication on a regular basis, make sure your prescriptions are covered. At least part of it is covered. Then use preventive care. The preventive care with any insurance company product that you have, they're most of the time, almost all the time, they're free. But guess what? Some people have a health insurance. The second year goes without even using this free part here. The preventive care, that is your annual checkups. If you have children, your immunizations, all those are done free of charge. So take advantage of it, at least on an annual basis. The earlier you check yourself, the earlier you actually live a better life. Then, of course, as always, choose the right plan for you. Pick a plan that fits your needs and fits your budget. Don't take something shady, and then when you get sick, you start calling me, hey, Margaret, they're charging me this much. Of course, they're charging you a lot because you chose to take something with higher deductibles. So you don't want to do that. Try to make sure that your coverage is all rounded and you know what you have. If someone gave you this product, tell them to explain to you, what do I have? How much do I pay monthly? What is my deductibles? What are my co-pays? And what are my out-of-pocket maximum if, God forbid, I was to be hospitalized? Again, as you always say, lower out-of-pocket costs. Try to make sure you lower those. Access to quality care, financial protection, almost everything comes with the peace of mind, knowing that, yeah, I'm healthy. I'm not sick. I don't see medical providers more often. But if something was to happen, the right coverage will help me to focus on what matters most, my health. I'm not going to be focused on anything else, but I'll be focused on getting well because I have the correct coverage there. So we jump now to the life insurance. So we started with our assets. We're protecting our cars, we're protecting our homes, we're protecting our health if we get sick. Because some people will tell you, hey, I don't need life insurance because I have I don't need life insurance because I do have health insurance. Again, as we saw, health insurance helps you when you get sick. It pays the medical cost, it pays the medication, but it's not going to pay you. It's not going to pay your home. It's not going to replace your income. It's not going to pay your debt. It's not going to fund your future goals, or it's not going to, leave anything for your children. So if you're choosing the right coverage, what are you looking for? What are we talking about? We talked about the right coverage. What questions should you ask your financial advisor or your agent? Always don't go with the cost first. So life insurance, again, here they tell us it provides financial protection to the people who depends on you when you're no longer there. It's no longer that now. You might no longer, if you're not there, your beneficiaries will get the tax-free death benefit. But now, the products we have now, they even give you the living benefits when you're living as well. If you happen to be hit with a critical, a terminal, a chronical, you access your money and take care of yourself. So the purpose of that are all these beautiful things right here. If I am no longer there, who is going to take care of my children? Who is going to take care of my home, my assets? It is life insurance replaces your income and keeps on maintaining your family and taking care of them, their daily expenses. You don't want to lose a job because you're critically ill and then your kids lose a home. No one wants that. You pay off the debt because most of us have debts out there. We have the mortgages that are not paid off. We have car loans, credit cards, and other debts. The life insurance, that is what it does. It pays off all the debts so that your loved ones can live actually debt-free. You can also fund your future goals. You can support your education, your milestones or long-term dreams. If you have children, for example, your mom, your dad, you have your children, they depend on you to be able to go to college. What happens if you're no longer able to work? If you have a critical illness and you're no longer able to work, or if you're gone, that life insurance is going to continue your legacy and take care of your people if you're no longer there to do it yourself. And then that peace of mind, knowing that I am here working today, taking care of my family, taking care of myself. If anything was to happen, because nobody plans that, I know I'm going to be set and will have that peace of mind. So when we choose the coverages, again, when we meet our people, we meet our people as financial professionals, we do what we call needs analysis. What are needs analysis? We sit with your family like up there. Every family is different. Every family has different financial needs and capabilities. So that is why we sit with you and your family and see what actually you need. What do you need? What can you afford? What does your future family needs? So before you choose, before you jump on telling me, hey, get me a cheapest term life insurance, is that what you need? Is that going actually to help you leave a legacy? Is that going to actually fund your future goals? Because remember, a term life insurance is a term, as the name says, they give you 20 years, 30 years. The maximum, most of the ones we have maximum is 35 years, and is purely protection. So after those years you have, term of years you have, it is going to be gone. But again, it has its own good advantages here. It's very affordable. Look at this family. They have beautiful young children. If they cannot afford a permanent life insurance at the moment, it does not hurt for you to take the affordable one that you can afford tonight or today. Protect your family until you're able to jump to what you can do, have for the future. So the term, if we can actually compare them, the term is affordable, very cheap. I tell my people, anybody can afford a term life insurance. It covers you for a specified period of time. Again, that is the name. Look for what you have. So those questions you ask your financial professional or your agent, it helps you to pick correctly. Remember, we are financial professionals. Everyone does not know these things, but the correct questions you ask are going to help you actually get what you need. So the permanent life, if you can compare, is a lifelong coverage. You're covered for the rest of your life. It comes with a tax-free death benefit if God forbid you pass, tax-free living benefits if you get sick, and retirement benefits if you live long. So this lifelong coverage, it covers you until the end. It builds you cash value, helps with legacy planning and long-term security because again, you're covered for the rest of your life. And if you're gone, you're leaving a legacy to your loved ones. So what are the key considerations for those ones who are considering to have a life insurance? What should you think about? Estimate how much income your family would need if you're gone or if you're sick, for example. Select the coverage that matches your financial responsibility or your financial needs. Ensure premiums remain affordable. We tell our people, don't pick 2 million because you feel it sounds good. Pick something you're able to continue comfortably paying. Because if you pick something beyond your means, you're going to reach a point where you cannot afford to pay, and you're going to lose the money you put in already. Ask about the riders and living benefits. Most of the coverages we have, be it term or permanent life insurance, they come with the living benefit riders. You don't even pay for those. Those are free of charge. So when you get sick, the riders we talk about for the living benefits are those ones that cover you when you get sick, a critical, a terminal, a chronical. It comes with the policy free of charge. And then some riders, you have like children's term rider, you have spouse term riders. If today you cannot afford to get a policies for 4 people, maybe you're able to get for the dad and the mom. You can put your children there as your riders. They have their riders. Normally, it doesn't even cost $10, to tell you the truth. And they are covered for over 25 years or 30 years. So do that in the meantime and make sure that you know at least what you have. So the real life lessons when scenarios we see here. So if you have a young family, for example, so young family provides income replacement to cover mortgages. So if you have like a young family like these people and you get sick or God forbid you're gone, it is going to provide income replacement to cover the mortgage, child care, daily expenses for your family here. So you make sure if you have a business, you don't want a business to collapse because you have a critical and you're no longer able to go to work. That life insurance that has those benefits is going to come in and protect your business and employees from financial hardship. Remember, we also have what we call the key person. Let me say you have a company, you have someone you feel like if this person, God forbid, was to go, that is dying or getting sick, my company will collapse. You can get what we call key person protection so that when that person, something happens to them, or it could be yourself, the company is not going to collapse. Your children's future. If something happens, you have to make sure that you ensure that your children education and dreams are not put on hold just because your life has been put on hold. So again, caring for aging parents, if you're older and you have a permanent life insurance that has built some cash value, it's going to help you actually take care of yourself when you're older, because right now you're able to work, you're putting in the time, but time will come when you're no longer able to do that. So protect yourself today, tomorrow, and the future by asking the correct questions, because every family, again, has different financial needs and they have different capabilities. Always ask questions. So our topic was actually around those questions. So questions every client should ask. What are those? That's what we want to talk about today. So what is covered? Remember, we talked about like 4 products. We talked about car insurance, home insurance, health insurance, and life insurance. So in those questions you ask yourself, or you ask your agent or your financial advisor, ask these questions. What is covered? If I'm getting a car insurance, a home insurance, what is covered? You know, understand what risks, items, and situations are included in your policy. You have to understand. Don't take something, you sign an agreement, does insurance agreement, you take it home without exactly knowing what it entails. So that is a responsibility of you as a client. You have always to ask the correct questions. Again, we are here. That is your agent. Don't just sit there and sign a contract without understanding exactly what is there. They get paid for that, and it is their responsibility to educate you fully until you understand what you're taking. So there is always what is covered and what is excluded. Remember, most of the time these insurance products, they exclude a lot of stuff and we don't know. Some things are not covered. If you don't ask, if you don't know, you're not going to know what is there. Know what is not covered so that there are no surprises when you need to file a claim. For example, we saw like in a car insurance, if we did not put the underinsured and uninsured motorist, if you know it's not there, at least you know. If you happen to be hit by someone without a car insurance, you know you're not going to even have to file anything because they're not going to cover you. So you have to know that. So know what is there and what is not there so that no surprises are there. What are the policy limits? I have a home for 500,000. I covered myself for 300,000. What are my limits? Obviously, the insurance company, be the home, the car, is going to cover you with the limits that you have. All those policies that we saw. If you have a life insurance for 500,000, if something happens to you, you're going to get the 500,000. If you have a home, whatever you actually insured yourself with, that is exactly confirm the maximum amount your policy will pay for the covered losses. Because when it comes to maybe possibly a car insurance, there is depreciation. If you got your car, you bought your car for 50,000, they're not going to possibly pay you that, because if the car, you have had a car for 2 years or even 1 year, it is going to depreciate. The car does not add any value, it loses value. So know actually your policy limits and what you'll be getting. And then what will I pay if I file a claim? Remember, we talked about the deductibles. If you, for example, you have a car insurance or home insurance or even a health insurance, you have deductibles on all those products. So don't start actually arguing that, hey, why do I have to pay $1,000? Why do I have to pay $500? That is your responsibility. Understand your deductible, co-pays, and how the claims process work. That again, it is that is the work of your financial professional, your agent. If they don't understand what they do, they possibly should not be your agent, because this is their responsibility to help you out there. And then number 5 here asks you, can the coverage be updated as my life changes? That is why we were talking earlier. Always remember to review what you have. If you took a coverage, for example, we can give an example of a car insurance. Maybe not a car insurance. You took an example of a life insurance. You're single, you had no children, you had no home. You're just, living your life. And now you have a beautiful home, you have children. Until thinking about reviewing that and actually make appropriate changes on that, make sure your policy can evolve with major events like marriage, home purchase, or a growing home or family. So if you have your 2 and 4 now, of course, you have to go back and update. Make sure the coverage you have allows you to update. When we talk about these coverages, for example, if you have a term that is just maybe 20 years, 30 years, It might not be as flexible as a permanent life, because a permanent life is more flexible for you to go back and change. So know what you have and know when you're able to go back and update. So is the insurance company financially strong? Check on the company you have as well. Talk to your financial professional. Look at it. Choose a company with a solid financial rating you can count on. So some people will tell me, I need something cheap. They go online and call a number they found online. By the time they want to file, even to file a claim, they cannot even find who to call. So do your due diligence to make sure that everything you have, the right question leads to the right coverage. The right coverage brings peace of mind. So be informed, be protected, and be confident in what you have. So it's one thing to be covered, but it's one thing knowing exactly what you covered in and what you have, just in case the unplanned happens to you and your family. So we cannot go without talking about the common mistakes, the common insurance mistakes we all make, many people make. And then we have, if we know the mistakes, we will be able to find a way of avoiding them or actually get the right protection by knowing those mistakes that many people make without knowing. I'm not saying anybody chooses to make a mistake, but it becomes out of not knowing exactly what you want. So what are those common mistakes here, insurance mistakes here? Buying only based on price. Again, this comes every single day with my clients that I serve. But this is my responsibility to educate you that the price does not determine what you're going to have. The needs analysis will show you what you need, and then you pick. So the cheapest policy may not provide the protection you truly need, right? You need just a liability coverage for your car. If you just hit someone, they'll cover them. Yours, you have no collision coverage, have no comprehensive coverage. You're going to lose out. So don't base everything on the price. Yes, price is good, but remember that the assets you're trying to protect are more important or more expensive in the future if something goes to happen and you do not have the correct coverage in place. So choosing the minimum coverage again. Please don't choose the minimum bare coverages. Try to make sure that what you have is covering you correctly and is going to help you when something happens. Not reviewing policies annually. Make sure you're reviewing your policies. Review what you have. Those are the common mistakes, because I get something from 10 years ago, 15 years ago, I bury it somewhere in a safe, and I don't even go back to look. Some people with a term life insurance, they expire without them knowing. By the time they come to check, oh my God, it's been gone, right? Or I had something when I was single, I never updated it. So go back. These are the mistakes we make. So we have to make sure that we avoid those as well. So overlooking deductibles and exclusions. Again, we talked about there are so many deductibles there and exclusions. But if you know what is excluded, you could possibly put an add-on and add it on. If you know, for example, you live in a flood-prone area and you have a home, you have to add that on and add extra premium to make sure that your home is paid. Or if you're paying little deductibles, maybe you're paying $250, right? So if you're overlooking the deductibles you're paying, maybe you're paying high deductibles, you could have paid less, or you're paying less, you could have paid the balance in between so that when something happens, you're well covered and your premiums are not too high. So failing to update coverages after major life events, we saw that. We have to remember all this. We have to avoid all those common mistakes. Those are common. The reason they call them common, most people will make those insurance mistakes by just focusing on prices, by choosing the bare minimum. The bare minimum we choose, that is the bare minimum protection you're going to get. So the bottom line here is going to be the right coverage today brings peace of mind tomorrow. What you have today, what you're paying for is what you're going to get. Don't be surprised because you chose based on the price, You chose the bare minimum. If that is what you did, that is what you're going to get if something was to happen to you. So what are the takeaways here? What can we think about after this? Maybe you've been taking a car insurance and you're taking out the uninsured motorist, the underinsured, you have no, you don't think about that. What have you learned today? Every time we come here, we don't have too much time to waste, but we come here to learn so that we can take precautions, so we can take, make better choices. So buy protection based on your need, not on the price. We saw that. Understand your policy before signing. Let that advisor help you. It is their responsibility. Know what is covered, what is excluded, and what your responsibilities are. It is going to help you if something happens. Review insurance policy again, whichever it is, your car, your home, your health, your life. Review regularly to make sure that if I used to be healthy and now I am sick, I might move from a higher deductible insurance to a bare zero or minimum, deductible, because I'm going to see more specialists. So review insurance regularly to make sure that you have what you need. Work with a trusted licensed insurance professional. Whichever product you have, be on your car insurance, your home, work with a trusted licensed insurance professional. Get expert guidance and personalized support you can rely on. Make sure that it doesn't matter. You may think that you're paying less, but even that $100, it might be going to waste if you're not actually protected correctly. So the right decision today brings peace of mind again and protection for you and your loved ones. So let us be informed. Let us make confident decisions. Protect what matters by asking the correct questions, by being informed in making those right choices, and protecting what matters most by being well informed and well aware. So I think this is your time now for questions, for anything that you have. We always thank you for attending these sessions. These are free financial literacy sessions that are set aside for our communities to be able to learn together. So this is your time. We do have a YouTube. Please go ahead and subscribe so that you can actually view what we did in the past. There is the number you can call again for more help if you need it. We are always here. We offer complimentary family reviews and needs analysis to help you and your family. Thank you once again for this wonderful evening. Yes, Emmanuel, unmute your mic and ask your question, please.
Hey, thanks for the good presentation. My question is on auto insurance. Am I audible?
Yes, you are.
Okay. My question goes to the auto insurance. Why do I have to have a collision and the uninsured or underinsured motorist?
Thank you so very much, Emmanuel, for that amazing and great question. Those are actually the same reasons the questions what we try to cover here tonight. So when it comes to the car or the auto insurance, those big jargons, those big names, the liability, the collision, the comprehensive, the uninsured, the underinsured, those are the key coverages that we really wanted to go through to see that we all understand them. So to your question, you asked, why do I have to have uninsured motorist when I have a collision? Of course, it makes sense because you feel like you have a collision. If you have that, anything that you collide with is going to be covered under that. But remember, so even if you have a collision and a comprehensive coverage on your auto, uninsured and underinsured motorist coverage is still important. The reason being, each protects you in a different way. So collision, as we said, we can see it there. Collision coverage pays to repair or replace your vehicle after an accident, regardless of who is at fault. You are usually responsible for your deductible, by the way. if there is a collision. You pay your deductible again, that is your responsibility. Then the insurance again will cover the remaining part. And when it comes to the comprehensive coverage pays for the damages caused by events other than the collision, such as theft, vandalism, hail, fire, flooding, or hit by an animal. When you hit an animal, it sounds like a collision, but it's not. So that is the other than a collision, that is what they call, and that is what is covered by the comprehensive insurance. But when it comes to the uninsured and the underinsured motorist, that is where the confusion tends to come. We feel like I have the collision and the comprehensive, and therefore I do not need the uninsured and the underinsured motorist. Sometimes that is not right, because for the uninsured and the underinsured motorist, those coverages protect you if the driver who causes the accident has no insurance or does not have enough coverage to cover your losses. Remember, from the beginning, the insurance, the role of it is for you to transfer the risk to the insurance company to be able to actually take care of you when something like that happens. So one of the biggest benefit of underinsured or uninsured coverage, it can help pay for the medical expenses for you and your passengers if you're injured by an uninsured or underinsured driver or motorist, the way they call it. For example, let us take an example. For example, if an uninsured driver totals your vehicle, your collision coverage can pay to repair or replace your car, but you will typically pay your deductibles. Imagine that. Of course, the deductible, you pay it because, those people, they hit you and they were not. So the collision coverage does not pay for your injuries. Remember, when we are hit, when we get into a car crash, it's not just the vehicle that gets into issues. Even you and your actually people who rides with you, they can have the problem. So the uninsured does not, the collision does not cover for your injuries if you're hit by someone who is underinsured or even uninsured, but that could have been actually covered. So the uninsured coverage helps protect you, your family, by covering eligible medical expenses. And depending on your state, the policy can also cover other damages. So this is what we actually talk about. So to simply really take it out, the collision fixes your car, comprehensive takes care of your car from non-collision losses, and uninsured and underinsured motorist coverage protects you and your family if another driver causes an accident but does not have enough coverage. So to make it easier, Mr. Emmanuel, think about this. So we look about those liabilities that covers for other people, the collision if you collide with another car, or the comprehensive that is other than the collision. But this, the uninsured and the underinsured, is going to come to your rescue if that person you insured for that other part, for those people who are not insured, who are reckless, would say, without having the insurance, at least they will cover that, your deductibles will be covered, your medicals will be covered, even other people who are riding with you will be covered, because again, we're trying to transfer those risks to other people, not ourselves. So I hope that answers your question, but this is a discussion again. Does that answer your question? If not, we can continue and look into that.
So you're saying if I have comprehensive, collision and comprehensive, and reliability as well, I don't need to have an insured or underinsured motorist.
So let me tell you something that I have seen with Mr. Roy. You want to come on? Yeah, go ahead, Mr. Roy.
Yes, thank you, Immaculate and Emmanuel. Those are good questions. So with having uninsured and underinsured, what happens is if it is a hit and run, one thing, it is a lower deductible if you choose out of your uninsured and underinsured, because it's usually just $250 to get into that part. And then it is not reportable onto your driving record if you have the uninsured, underinsured, and that's exactly what happened.
Yes.
While it accumulates if you use the collusion and the comprehensive, it is usually reported and it counts against your points. So it is not per se that you don't have to have the uninsured and underinsured, but it helps you in one, lower deductible, and two, avoiding to have this reported onto your driver's record if somebody actually did do a hit and run away. Then on the other part, the comprehensive and collusion, what happens is the deductibles are usually a little higher. And when you do a claim against those, then it is usually counts points against your policy so that the next year it will be renewing a little bit higher. Now, also the age of your vehicle matters. If you have a vehicle value that is, say, $1,000, $2,000, you don't want to put too much of the collusion and comprehensive if it is within those deductibles, because deductibles are usually 500, 1,000, 1,500. So you come up with you have an older car, you could go ahead and put just the collusion and the uninsured and underinsured, or both uninsured and uninsured, as well as collusion, if you want the whole full coverage. But remember, when there is a claim, if you have a deductible of 1,000, then that 1,000 will be almost in part balancing off with the value of your car, and it may not be exactly what you have. So, as Mr. Immaculate was saying, we have to know our clients and also the value and all the full information about your car. So if you have a $50,000 car, you do want to have full coverage on it. And you do want to have the uninsured, underinsured in case of that situation happening. I hope I threw some light on there and I'm able to give you some more information if any questions in addition to what Mr. Immaculate has.
If I try to iterate on what you've said,
Yes.
just to make sure I have a correct understanding. So you are saying collision and comprehensive, it's going to cover you whether you were hit by uninsured or underinsured motorist, right? But you're gonna have a higher deductible. So it's not a matter of you're not going to be covered or not if you are hit by uninsured or underinsured, but it's the amount you have to pay under deductible and those other things you talked about. On that part, do I have a correct understanding?
Yes, to some part you do, and all these factors are dependent on which insurance company, because that's why it's always good to read between the fine lines, because different insurance companies come up with all these different definitions. But per se, if you have the full coverage, yes, it can cover both the uninsured and underinsured, as well as also giving you the coverage of having your car repaired. But what happens next is, on a renewal of a policy, there is always the possibility that your insurance will be increased if they paid out on the uninsured, underinsured part. And, it is always also reportable on your insurance record. So, in part, having liability and uninsured does help you quite a bit to cover that part of the uninsured if you're not going to take the full coverage. But yes, Emmanuel, the full coverage will also cover you all the way. But at times you may be paying a little bit more if your car value is not as expensive as it should be. So all those have to be balanced, as well as also keeping your record clean, and also using the underinsured at a lower deductible, which is 250 and below. Hopefully that sheds some light in that area. Did I answer your question?
Yeah, thank you.
Okay.
You said that was a good one. Yeah, those are the same questions really, because they tell us we have a full coverage and they feel like we're done. And then when something happens, yes, they will cover, then you end up get a double in the next renewal. So it's always good to know which company you have. Again, as Mr. Roy said, which company do you have? Do I have to add this on if I have a full coverage? Thank you so much, Mr. Roy, for that. And Emmanuel, that was a great one. These questions are real. We get this all the time. So it's always good to know, because some of those are put in fine prints. They're not going to explain much. They'll give you the policy. If you don't read and you know what is there, then you're not going to know. It's always good to discuss them here. Any other person with something else? Or if not, we already went way past our time. If nobody, we'll go ahead and close here. We have this recorded. It will be shared for everyone again. All right. Thank you so much once again, everyone. It is always good to be here to learn together, to share the knowledge, because, knowledge is power, and learning is always good because we end up picking one thing or two. We might think we are aware, we know everything, but the more we share, we find something that may help us in the future. Thank you once again for joining us tonight. I'll see you again next week. On Thursday, same time, we'll share the recording. If you came a little late, you'll enjoy the full discussion. Have a great night, everyone.
You too.